All right, let's talk about the Waterloo region, because wow, the real estate game has done a complete 180. If you've been keeping an eye on the market, you've definitely felt this shift. So today, we're going to break it all down. What this power shift really means, why it's happening right now, and most importantly, how you can actually navigate it. Let's dive in.
You know, for what feels like an eternity now, there's been one massive question hanging over everyone's heads, right? Is the real estate frenzy finally over? Are we done with the crazy bidding wars and those scary unconditional offers?
Well, here's the thing. For the Waterloo region, the answer is a big, resounding yes. I mean, the power hasn't just shifted a little bit. It's like the sellers handed the keys directly over to the buyers.
Okay, so what does that even mean, a power shift? What does it actually look like when you're out there on the ground? Let's get into the details of this brand new market landscape.
So the official term for what we're in is a balanced to tilting buyer's market. Yeah, it's a mouthful. But what it really means is pretty simple. Sales have slowed way down, there's way more stuff to choose from, that's the elevated inventory part, and prices have stopped that crazy upward climb. That combo, it's basically the perfect storm for giving buyers all the leverage.
And this right here, this is the new reality. Think about it. Bidding wars, they're pretty much a thing of the past. They're the exception now, not the rule. And maybe the best part? Those super important conditions, for financing, for home inspections, they are back. Buyers can actually protect themselves again, which is a protection that was totally lost during the frenzy.
Okay, so that's the what. We know what's happening. But now for the big question. Why? What exactly happened to slam the brakes on this runaway market?
This number right here, this is the headline. 25%. For most of 2025, sales have been chugging along at a full 25% below the 10-year average. We're not talking about just a slow month or a blip on the radar. No, this is a deep, fundamental cooling of the entire system.
And this really digs into the psychology of it all. Remember that crazy FOMO, the fear of missing out, that was driving everything? Well, it's gone. It's been replaced by caution, by people actually looking at the data. Buyers today, they expect to negotiate. And you know what? They have absolutely no problem walking away if a deal just doesn't feel right. Total game changer.
Really, it all boils down to classic supply and demand, doesn't it? You've got fewer people buying and more houses for sale. Simple as that. And when buyers have more choice, as this quote points out, that's where the magic happens. That choice is what gives them their power back. The power to negotiate, to add conditions, and just to, think before making a huge decision.
Now here's a really crucial point. This slowdown, this cooling trend, it's not hitting every single property the same way. It is absolutely not a one-size-fits-all situation. The type of home you're buying or selling, it makes a massive difference. So let's get into those specifics.
Okay, so check out this leaderboard. It really tells the story. You can see freehold townhomes and semi-detached houses are holding up the best. Still pretty popular, especially with families. But then you look at detached homes and especially condos, and demand gets a lot softer. So why the difference? Well, for detached homes, it's a huge affordability hurdle. And for condos, they're really feeling the squeeze because higher interest rates are jacking up the carrying costs, especially for investors.
All right, so if you're a buyer, your ears should be perking up right now. Where are the golden opportunities? Think of this slide as your treasure map. You want to be looking for those higher-priced detached homes that maybe need a little TLC, dated finishes, or investor-heavy condo buildings where those carrying costs are starting to bite. And a big one, sellers who are super motivated because they've already bought their next place. That's where you're going to find some serious negotiating power.
But, it's not all just numbers and charts. There's a really fascinating human side to all of this. So let's talk about the new market psychology. How are actual buyers and sellers behaving now? How are they changing their strategies to deal with this new world?
For sellers, the new rule is incredibly simple, and it's brutal. Price it right, or it will not sell. Period. The homes that are priced for today's reality, yeah, they're still moving, but if you're still dreaming of last year's prices, you're just going to sit there. This market has zero patience for wishful thinking.
And then you flip the coin. What about the buyers? Well, they've discovered a new superpower, and it's called patience. They are just not willing to jump on the first thing they see anymore. Instead, they're taking their time, extending their search, waiting for the right house at the right price. And that discipline, that's a huge reason why the market is staying cool.
Okay, so that's where we are right now, in late 2025. But the big question is, where are we going? What's next? Let's pull out the crystal ball and see what the experts are predicting for 2026 and even further down the road.
So, the road ahead looks something like this. For the next few months, into the beginning of 2026, expect pretty much more of the same. It's going to stay a buyer's market. But as we look towards the end of 26 and beyond, the thinking is that as interest rates finally stabilize, the market will slowly start to absorb all this extra inventory, and then long-term, we'll get back to a more normal, moderate, and frankly, sustainable level of price growth.
And this right here, this is the reason why a total market collapse is just really, really unlikely in this region. Even with this short-term cooling, you have to remember the fundamentals. The long-term demand drivers for Waterloo are incredibly strong. We're talking population growth, immigration, that massive tech sector, plus education and healthcare jobs. All of that creates a really solid floor under the market.
All right, we've covered the what, the why, and the what's next. So for this last part, let's get practical. Let's turn all this data into a real, actionable playbook. This is how you play your cards right in this brand new market.
This is the pro's playbook for today's market. Just 3 key things. Number 1, get obsessed with the micro data. Forget the regional headlines. What's happening on the specific street you're looking at is what matters. 2, tailor your negotiation. Everything is on the table now. Price, conditions, you name it. And 3, this is for the sellers. You have to price with precision. Be brutally honest with your price from day one, based on today's buyer, not last year's news.
So this brings us all the way back to the ultimate question, right? Is it a good time to buy or sell? Well, for buyers, if you've got job stability and you're in it for the long haul, then yes. Honestly, these are probably the best conditions we've seen in years. And for sellers, it's still a yes. You can absolutely get a fantastic result. But, and this is a big but, your success now is all about strategy, presentation, and realism. You can't just ride a wave of market momentum anymore.
And that's really the bottom line here. The era of pure market drama is over. We are now in an era that rewards data. The power has shifted, the rules of the game have totally changed. And the advantage, well, it now belongs to the people who are informed, who are patient, and who are strategic. So I'll leave you with this question. In a market that rewards data over drama, what's your next move?